The gridlock might finally be breaking. After 41 days, the longest government shutdown in US history, Washington's looking like they're somewhat close to a deal. Markets are now betting that this will be all wrapped up within a few days or so, but as we've seen, nothing in this shutdown has gone according to plan. But that idea, the prospect of reopening, has people kind of sitting back, relaxing, wiping off the sweat off their forehead, and economists bracing for impact. Because once the lights come back on over there at the government, everybody's going to get back to work and we'll get a wave of delayed data that'll hit all at once. Jobs, inflation, spending data, we'll get a whole pile of it, and the Fed's already signaling nerves ahead of its next big decision come December 10th at their interest rate decision as to what they're going to do with the rates. So this week, it's not about the government reopening, rather what comes after they reopen. The potential policy pivot, a flood of numbers, a market that suddenly feels way too comfortable at the top. Let's break it all down. So after 6 weeks of frozen government operations, 8 Democratic senators crossed the aisle late last night to move forward a compromise funding deal with the Republicans. Analysts at Evercore say the odds are rising that the government could potentially reopen by the end of this week. Prediction markets also agree with that. Both Kalshi and Polymarket think that Thursday are the most likely date that the end of the shutdown will arrive. Now, once the Senate finalizes the bill, it'll get sent off to the House, and then they'll have to hear it and then make their votes, which could happen as early as Wednesday or Thursday, but lawmakers could face literal travel delays with the shutdown-related flight cancellations still grounding flights to D.C. So the deal only funds the government through January 30th. And that means, all right, we might get this reopening, but we could be right back here again in just a few months. But for now, markets are cheering the possibility of some resolution because there's hope. There's a fight to keep fighting. And that led all 3 indices to close green today. The NASDAQ up 2.2%, its best day since May 27th. The S&P 500 up 1.5%, and the Dow up 0.83% today. Goldman called it a relief mixed with reality kind of day. Investors are feeling pretty optimistic, but everybody knows this is more of a pause than a fix. So what's coming next is when the federal agencies reopen, expect the data deluge. The September jobs report will likely be one of the first to hit. It's what everybody's been waiting on, and it's basically been ready since all of the numbers were collected before the shutdown started, October 1st. So it's pretty much sitting on the computers ready to go, and economists expect the Bureau of Labor Statistics, the BLS, to publish it within just a few days of reopening. Now, that report will tell us whether the labor market slump from late summer worsened heading into fall, which is what some Fed members projected, some economists. So they're going to be watching that data pretty closely. But October's inflation, wages, and unemployment data could take weeks to be reconstructed. And that's a major headache for the Federal Reserve, which meets again December 10th to announce what they're going to do with the rates. Without some of that recent inflation data, they're flying with partial visibility. They got like some of the story, but not all of it. And the odds of a December rate cut have slipped to 63.5%. And every Fed speaker this week could tilt those odds one way or another, probably down closer to the 50%. So 10 Fed officials will speak this week, and they're painting very different pictures of where policy will go next. They're really sending mixed signals. And I'd imagine that's on purpose because they almost don't want to pre-price in a cut if they are going to do that come December 10th. But San Francisco Fed President Mary Daly opened the week sounding cautious but kind of hopeful at the same time. She said demand is cooling, tariff-related inflation is under control, and AI productivity gains could let growth run faster without reigniting inflation. But she warned that we don't want to hold rates too long and end up injuring the economy. Then came St. Louis Fed President Alberto Mussolini, and he really struck more of a optimistic tone. So he's saying he expects a strong rebound in the first quarter of next year once the shutdown ends and fiscal support begins to kick in and get rampant. So his message tread lightly with more cuts. So he's saying, hey, let's be careful, but let's keep cutting here. There's limited room for further reductions without becoming overly accommodative, he said. Mussolini really highlighted the strain on low and middle income households who are feeling these high utility bills, food costs, and inflation really eating away at their real incomes, which has done little to keep up with the rate of inflation and these rising prices, but said he still expects the job market to stabilize around full employment. So even the guy who's supportive of cutting rates thinks that the labor market's doing good, so that's technically not a good sign. And then Fed Governor Stephen Myron, who wants to move faster, pushing for a 50 basis point cut instead of the usual quarter point, which is the 63% we were just looking at. That's on a 25 basis point cut, that quarter percent cut. So his argument is that the Fed's too focused on lagging data and not necessarily looking forward enough. If you're making policy based on what the data is now, you're potentially being backward looking because the data they're looking at now is from previous months behind us. And the data now could be in a completely different picture. And that's the divide that we're seeing. Dowley's watching inflation. Mussolini's watching this balance. And Myron just wants to step on the gas and cut rates. So Powell really wants to stand neutral, repeating that the December rate cut isn't this foregone conclusion. So I'd imagine he's really sticking to that. And right now, there's this comparison that the Fed's kind of like these three people in a car that are all fighting over the wheel. Some of them want to go this way, and then they want to go this way. And then just imagine being like a innocent bystander just watching what's going on from a distance. Like, man, they're going crazy in that car. Meanwhile, the Treasury's putting investor appetite to the test with this huge bond auction coming up, $125 billion in bond auctions this week. Today we had a $58 billion 3-year auction, which saw pretty strong demand, especially from direct buyers, which is a good sign heading into Wednesday's $42 billion 10-year auction. And then we got another one on Thursday for $25 billion for a 30-year auction. Strategists at BMO Capital think they'll be well received, but during the shutdown, results were mixed. So some auctions flew, some kind of flopped a little bit. So honestly, they're saying like it could go any way. The 10-year yield sits at near 4.12%, the 30-year yield around 4.7%. Getting awfully close to 5% again. And if demand for these longer dated treasuries weakens, it'll reignite questions about the deficit, the deficit, that problem, and especially with the potential Supreme Court ruling that could erase key tariff revenues and force Treasury to issue even more debt in the future. And what that makes me think of is, all right, this revenue that the Trump administration had hoped for is now going away. The government still needs to like pay people and keep the lights on, like they're trying to turn them back on right now. They still need to continue to keep those lights on. And when they take away some of the revenue they were planning for, well, we got to issue more debt. So treasury yields go up. And what's the consequence of that? Higher interest rates. BMO's Ian Lingen warned that losing those tariffs could rekindle concerns that a larger deficit will translate into larger auction sizes. In other words, the borrowing machine's not slowing down anytime soon, everybody, so don't get your hopes up. And then Goldman at the same time sees plenty of upside left in this AI investment cycle because everybody's wondering if this is a bubble or not, but they're also flashing more of this yellow light at the same time. Today, the firm compared today's market enthusiasm back to the dot-com era, saying investors should stay positioned for upside, but protect against the downside just in case anything gets a little rough. Over the past 2 months, $36.5 billion has poured into tech and AI funds, the most on record. 62% of all the stocks now are in a downtrend as the market's heading for records. So that's poor market breadth. And when only a few names drive all of the gains and the rest quietly bleed, Historically, that's an imbalance that doesn't last very good. That's not a good sign when the market has weak market breadth. And then at the same time, bank CEOs are already warning about this potential 10 to 20% drawdown next year. Michael Burry's short we've been talking about with Palantir and Nvidia. So yeah, optimism's pretty high, but there's no absence of risk that seems to be creeping in every single corner. And while the stock market's been popping off, there's this other concern on Main Street that they're still stuck. So new data shows that 46% of parents have children who are moving back home and 38% are struggling with debt, up 15 points from last year. And then when we get into what this article is talking about, small businesses are fighting to survive the holiday season, which is huge for them. So according to Constant Contact's Small Business Holiday Outlook, 70% of consumers are hunting for discounts right now. 46% of small businesses have been hurt by tariffs. 43% of them plan to raise prices next year, and 22% say weak consumer finances are their top concern right now. So most owners are trying to keep their prices flat through December so they could get through the holiday season, which makes up a huge chunk of their revenue for the year through December, eating higher costs or reworking products. But many admit 2025 might be the last year they can really do that. So for 60% of small businesses, the final quarter makes up half of yearly revenue. And that's why they're now holding the line now. But come January, they're possibly saying like, hey, expect higher prices. It could catch up pretty quickly. And that could be some of the concern that some of these Fed members have going forward. For some of them Fed members that don't want to cut rates because inflation, which we're not really seeing yet, that could be what they're considering. So as far as the rest of this week, it's pretty loaded. We got more Fed speak. That'll keep on going. We got through today. Tomorrow, Veterans Day. The stock market will still be open, but the bond market is closed. We'll get Michael Barr speaking. Small Business Optimism Index. Wednesday, New York, John Williams. Philadelphia, Anna Paulson. I believe she's new. Chris Waller, Raphael Bostic, Stephen Myron again, Susan Collins. Friday, Mary Daly again. We likely won't get any of this data. John Williams, Neil Kashkari, Alberto Mussolini. Like, it just keeps on going. And the government's potential reopening also means that the data gap starts to close once we start getting all of that in, beginning the September jobs report and followed by delayed inflation and wage updates as they come in. So then on top of that, the bond side on Wednesday, we got these treasury auctions, and Thursday, which will reveal whether investors are still confident in the U.S. fiscal story. So here's the setup. Here's what we got today. The shutdown might finally end. Emphasis on the might, everybody. The Fed's divided and running out of clarity. The bond market's being tested. Small businesses are tapped out. And the market's rallying on optimism it might not be able to afford. It's not panic, but it's not complacency either. The system's just running on hope, liquidity, and momentum, which one of these will have to run out eventually. So stay tuned. I'll keep you posted as the week unfolds. And when these numbers start rolling in again, I'll be sure to cover them here so we all know what's going on, everybody. Hope you're doing awesome today, and have a good one.